Good morning, everybody. We're going to get to the SPY and the SPY ranges for today. But first, I'm going to explain why I believe the markets are being manipulated. Let's understand if you work for a hedge fund, if you're managing assets for a large bank or institution, when do you get fired? You get fired if you're on the sidelines and you miss any type of bullish run. You're investing money for your clients and you're on the sidelines when the markets are running higher, gets you fired, gets you in trouble. So understand, why is the market continuing to go higher? It's easy. I'll explain. Supply and demand. Now, you keep buying the market. Institutions keep buying the market or any individual stock. It's going to go up. It only goes down when there's selling pressure, when there's shares exerted on the market. So as we'll give an example, as they're buying Tesla and Tesla's going higher and they're not selling Tesla and they continue to buy Tesla, it keeps taking steps higher. So understand, in my opinion, there are a number of stocks that are overvalued and overrated. Let's continue on with manipulation in the market, okay? Let me bring up Netflix as an example. Netflix yesterday was struggling, went as high as 414 yesterday morning, okay, back down to 400. I think it closed maybe around 404. I'm not really sure. That's not important. What's important is JP Morgan came out this morning and they raised their price target on Netflix to $470. Now let's remember, Netflix was in the $170, $180 range. Earlier on, let's remember, at $255, it finally found support before going back above $305. So where is JP Morgan during all this time when Netflix is 190? Where's JP Morgan saying we're raising our price target to 470? When Netflix was 255, where's JP Morgan saying we're raising our price target to 470? It's not there. It's only there when they're in a position or big money's in a position and it's struggling. Let's turn the tables. Let's flip over to Coinbase. Coinbase, which was down 16, 18% pre-market yesterday, is being sued by the SEC. Because they didn't register as a broker since was it 2019. Understand, I've heard whispers on the street of potential fines that could total $5 to $6 billion. When you look at the market cap of Coinbase as a stock, its market cap is only $12 to $13 billion. If they face $5 to $6 billion of fines, Coinbase will go down. Is that stopping Kathy or other institutions? No. Kathy went ahead and she purchased 420,000 shares of Coinbase yesterday as it was dropping. Now, does that mean Coinbase is over? Coinbase is going to run. Bitcoin's going up. No, in all likelihood, Coinbase will face more severe pressure. It really depends what other large institutions and holding companies do with their stock. The fact that Kathy's pushing it up, the fact that it's up 3.5% to 4% pre-market. Again, it's a little too early for me to take a stance there because I don't want to be incorrect and have them push it up to $60 before it finally tanks back to $40, or push it up to $55 before it finally tanks back to $38. So again, it is on my watch list. What else do we want to discuss? Well, I always tell you guys, I don't really trust China. China finally came out with some numbers that appear accurate. China reported minus 7.5 year over year export numbers for May. They were expecting an 8% increase. So instead of an 8% increase year over year, export, it went down almost 8%, 7.5%. Understand, China is the world's largest exporter. So if China's economy is struggling, which I've mentioned for a number of weeks, even with the latest Chinese rally in the Chinese market, again, I'm staying away from Chinese stocks. I heard people on my Discord talking about PDD. Love was kind enough at $78 to give out her Alibaba bullish trade. Now Alibaba's at what, $88 from $78 literally a week ago. So who's Love? You're asking me. She's one of the partners on our Discord, SOC Trading. You could join. You could join myself. You can join Romeo, who's doing live trading today. I believe he's doing it twice today at 10:15 and then again at 2 p.m. And then he'll also be live trading again Friday morning, Lotto Fridays. How do you join? It's soc-platform.com. And I'll get to the other uses for Discord shortly. Let's see what else we got. Breaking news, volatility index, the VIX drops below 14 for the first time since February 2020. Let's remember, February 2020 led into March 2020, which is the pandemic month. So, in other words, volatility in this stock market is now at the lowest point since pre-pandemic levels. The VIX is now down 55% from its recent high 2 months ago, basically telling you bulls aren't messing around. And again, I explained why the market is as strong as it is. Again, if you continue to buy the market and you're not selling, price will go up. There's less supply and there's more demand, and the demand is continuing. Again, if you're an institutional investor, if you're an analyst managing money, and you're missing this bullish run in this so-called bear market, then you're likely to get fired. You're likely to be out of a job. So these institutional investors, as big tech, and we've mentioned the 7 top companies in big tech that are outperforming the S&P, understand, or 7%. It's something like 93% are underperforming the S&P. It's such a rare case right now. So it's really the strong are pulling and dragging the market higher. And when we see days, and I'll bring up the SPY, when we see days, and I mentioned this to Discord, when we see days with lighter volume, okay, the markets tend to fade higher. Let me just go down to a 3-minute. Let's see if we can back this up. Here we go. Let's go. 2 days ago, we're fading higher on light volume, increased volume. We have a nice drop here. Again, the market's kind of choppy. All right. Remember, we chopped for about, let's just go back here and bring up the one. We chopped for about 3 weeks in that 408 to 414 range. 3 weeks we chopped. Okay. We finally pushed higher. We rejected 420. We came all the way back and tested the 409 range. What was this, about 2.5 weeks ago, May 24th. Okay. Then the other morning, when debt ceiling got passed, right, we spiked up. We continued the rally higher. When we dropped down, we spiked back up. So understand what's going on with the debt ceiling. The debt ceiling gets passed, and everybody's talking about liquidity being pulled from the market. Yet the market keeps pushing higher, and those that are watching or listening on Twitter or other social media saying, well, what liquidity is being pulled from the market? The market keeps pressing higher. You expect us to be foolish. And then you have certain institutions coming out and saying, be careful, be wary of a 10% pullback. Meanwhile, they keep buying the market and pushing it higher. So I will talk about my SPY ranges. For those that joined me on Monday, let's remember I predicted a 3-point swing in the SPY from the low to the high, 3 points. Monday was 3.25 points. Yesterday, I said similar trading activity to Monday. And what did we see? We saw a drop, a spike, a fade higher, a good drop, and then a rebound at the end of the day, almost identical to Monday's chart. Understand, the past few Wednesdays have not been like the previous Mondays and Tuesdays. Again, Monday, Tuesday, 3.5 point range. Yesterday's range, 428.58 on the top. Basically 425.99, which is 426 on the bottom. So you're talking about a 2.5 point range in inside day. So I'm expecting a little more chop, a little more volatility today. Again, the past couple of Wednesdays, movement's been 5-point range, 5.5 point range, and a 7-point range in the SPY. So those are pretty significant movements. I'm excited for trading today because I think I'm going to get some good plays out of it. Again, if I see the SPY go up to 430 and reject that level, psychologically level, and I say, okay, 430 is the top. If I say we might see a 5-point swing, we reject 430, we're back down at 424.90 or 425. Understand what I mentioned yesterday and the previous day before, and I guess I'll have to bring up Discord to show you guys that. So just bear with me right here. Share the screen. Let's bring up Discord. I'm going to bring up the dark pool levels for the SPY. So let me just add this to the screen. There we go. Okay, so what I go to flow and algos, and we'll take out, let's see, TRDP levels for the SPY. Let's see what we got here. All right, dark pool levels for the SPY. Hopefully everybody can see this with me. You're seeing the top level at $428.84. So I mentioned that yesterday. I mentioned that the day before. We actually came close yesterday to attacking that level and rejected that level. And we're back down to 428. So it wasn't a major rejection. And anytime you see the market dip, they've been buying the dip. But here's what I've noticed. If you're looking at 426.85, if we break under this level, 426.85, which has $6.2 billion worth of supply out there. The next level under 425 has under 1 billion, 422.87 at 1 billion. So these are almost like ghost zones, meaning if the market has a substantial drop, I personally believe that we could see $420.88. Now we can talk about the trade that I mentioned yesterday. First off, if I'm trading and making a trade off that prediction and I have $1,000 in my account, I'm going to use approximately 20% of that money for a trade. If I have 10,000, again, 20%. Does that mean that I enter the trade all at once? No, I ease into a trade the same way when I'm making money, I ease out of a trade. I sell one or two contracts. I wait for it to go a little higher. I sell one or two contracts, getting my exit on my average price up here rather than just exiting out here. The same way when I enter a contract. Let's just give an example. In fact, let's give the example that I mentioned yesterday. SPY puts, which are of course dangerous when you're fighting the uptrend in the market. So I'm not suggesting this for everybody, but I did mention this example yesterday where I mentioned going out till Friday, which gave me Tuesday, Wednesday, Thursday, and Friday, 4 days to be correct. I mentioned that I was looking at the $425 puts, but I was not going to enter them until I saw the SPY hit the dark pool level of 428.84 and reject. Now, we didn't get there yesterday, and I might have entered a little too soon. But late in the day, I looked at the 425 puts expiring on Friday. The low on the day at the time was $74 per contract. My initial entry was, I think, $85. I took my average down to $80. Now, where did they close yesterday? They closed after hours because, again, trading the SPY options allow you to trade up until 4:15 p.m. Goes an extra 15 minutes. So the SPY basically closed at 428.03. My options were $68 per option. When the SPY went up after hours, my options went down to $62 per option. So again, I'm in for 15 contracts. I spent a total of $1,210 on these contracts. My average cost is just over $80 per contract, $80.66. Okay, again, they originally closed at $68 a contract, and then they closed at 4:15 at $62 a contract, meaning I'm down $18 and a little change per contract. And if you do the math on that, I'm down about 21%. Does that mean I'm going to take a loss on these? No. Does that mean I'm going to scare sell? No. I went out to Friday for a reason. Again, historically, after debt ceilings have been passed, we can go back to 2011, 2013. The markets had a decline. The S&P declined 5% one of those years and 16% one of those years. And yes, one of those years we went over the deadline and the credit rating of the U.S. Government got downgraded, which is why the markets fell 16%. That's not a fear right now. It was a fear going into debt talks. Does that mean the market's just going to continue to push higher? Me, I find it hard to believe. I get you get all these analysts, and then you might be inverse Jim Cramer, where he's telling you over the weekend he's bullish, and then Monday morning comes out and he's telling you to buy puts, and you're like, what am I doing? Inverse Jim Cramer. Was the market just going to stay flat? Because that's the only way he's wrong on both occurrences. Okay, so we covered that. Let's go over SPY ranges for today. Again, we closed at 428.03 this morning pre-market. We are at 427.88, so we're basically flat. So talking about dark pool levels, and we'll bring them up one more time. We've got a dark pool level of 426.85. So here's your bull case scenario. Your bull case scenario is the market opens, it pulls back just under that dark pool level. So we see something like 425, 40, 420. I'm not 425, excuse me. We pull back to that dark pool level, and I'll just pull it up one more time, okay? So that dark pool level is 426.85, okay? 426.85. So I always say plus or minus 20 cents. So your bull case scenarios, we pull back to that 426.85. In fact, you pull 30 cents under it. So we go 426.50. We're going 5-point range. That acts as support, and we hit 431.50 or even 432. That's your bull case scenario. Your bull case scenario is they continue to buy up the market. They continue to buy up tech. Oh, coin has an issue. They continue to buy up coin. They continue to push Tesla 225, Tesla 230, something to that extent. They're buying Netflix. They're buying AMD. They're buying Apple again, pushing it over 180. Again, that's your bull case scenario. We drop to 426.50 and then we shoot up to 431.50, almost 432. So if you're a bull, you're waiting on the drop, you're waiting to find support, you're waiting on volume. Once you see volume spiking and support in the market, you're like, okay, I'm going to get into my calls, and my calls are going to skyrocket when the SPY goes to 431. Now let's go over the bear case scenario again, because I am a bear. I believe this market is overvalued. I already mentioned JP Morgan increasing their price target on Netflix, which has a forward PE of 38. If Netflix goes up to $470 like they're putting their price target on, understand that's another 20% gain. If that's another 20% gain, then Netflix's forward PE will be closer to 46 or 45, which is ridiculous high. Unless they were like a complete AI tech company where you're like, okay, we'll give them a little leeway on that one. But they're not. They're a streaming service, the streaming service that spends a shitload of money on content, a streaming service that really can't defend itself when there's password sharing. Then they ask people, please don't share your passwords. Then they ask people, there are ways around all of these things. I have friends that told me what he does is he goes over to his buddy's house and he'll use the Netflix password once a month. And as long as it's registered once a month, then it won't think that you're sharing, even though you're located at two separate houses. Let's say you had a summer vacation house. That's why Netflix allows this to happen. As long as you check in and sign in once a month. And if someone wants, they could ask questions on the side, and I'll explain that a little better. Okay, back to your bear case scenario. So your bear case scenario is we already know that there's a huge dark pool level at 428.84. And we hit that level. They start to sell. So you see rejection at 429. You see rejection at 429. And I'm telling you, I think we're going to see 4.5 point range today. You go 429 down to 424.50. Now, again, it would really take something to flip the market because everybody is buying the dips. And when I say everybody, I just mean big money. Understand the market's movement is controlled. 90% of the money in the market is controlled by 10% of investors, meaning large banks, large holding companies, hedge funds with just piggy banks that are just, dropping to the floor. Okay, so what else do we want to talk about this morning? Treasury cash pile rebounded to 71 billion on Monday from 23 billion. So understand there is liquidity being pulled from the market. There were a number of treasuries that were sold Monday. I think it was $163 billion worth, which is pretty substantial. Again, you could find the U.S. Treasury auctions if you search online. Then I'm going to mention lines of support and resistance, dark pool levels. We saw some dark pool activity at the 428 level. So the fact that we closed the 428 level and we've seen a ton of dark pool activity there tells me that you're either buying or selling at 428. Me, I've got to think that they're selling and taking profit. However, again, supply and demand, if there are more people buying the market and there's $5 trillion on the sidelines, then yes, the market could push higher. Let's see, call volume and the SPX continues to surge to all-time highs. Hopefully you guys can see that with me. Okay. Recently rising to $700 billion in a single day of notional value exchanged on the call side. So again, big institutions, options traders, they are pushing this market through the roof. The source on this one is Goldman Sachs. Coinbase stock sinks as penalties from SEC suit could top $6 billion. Analysts say, now I already mentioned that again, if they have a market cap of 12 to 13 billion and they have to pay fines of 5 or 6 billion, they're being big trouble. All right, billionaire hedge fund proprietor Paul Singer warned investors of a prolonged market cycle of low returns in financial assets as recession risks continue to mount. Per the Business Insider, valuations are still very high. There is a significant chance of recession. Again, so you've got institutions saying, you know what, our chance of recession, I think it was Bank of America, reverted yesterday. They had said 35% chance of recession. Now they're saying 25% chance of recession. So again, these are just numbers that they throw out, again, because if they weren't throwing out any specific chance of recession and we hit recession, then the banks would be blamed. Hey, Bank of America, how come you didn't warn us? Oh, they're warning us. Same with JP Morgan. Netflix price target 470. If Netflix actually goes up to 470 and JP Morgan doesn't move their price target, then they'd be like, hey, you dumb fucks, why don't you move your price target higher? Now, again, to me, price target increases generally are manipulation. Price target decreases generally manipulation. Yes, there are some truth and some facts behind it, but understand when an institution comes out and they give out a price target increase, they're already situated. They've already sold their puts, okay, sold puts to you retail traders. They've already bought calls themselves. They've already bought stocks. Then they come out with their price target increase. What happens? Market pushes it higher. Again, we can look at Netflix this morning. Interesting. Hedge funds recorded the biggest outflows of years in April as investors pulled $11.57 billion out of mutual funds and the market. That's pretty crazy to me. Again, I'm looking at the SPY, just seeing if there's anything I want to do mention. Boeing mentioned yesterday that they have a delay in their production process. What happened to Boeing yesterday? Again, it rebounded, but at the time that the Boeing story released, Boeing was 207, dropped down to 203. Understand Boeing makes up, I think, 7% of the Dow. So what you do is you take the movement in Boeing stock from 207 to 203, which is 4 points. You multiply it by 7, and you understand the drop in the Dow or contributed by Boeing was 28 points at the time. Now, I guess Boeing probably went back up after that fact. And okay, so we mentioned yesterday we saw the market drop at one point, the SPY to 426.64. And again, if I look at the dark pool level, it's 426.85 was the next level down. So again, once we crossed over that 426.85 level, it found support plus or minus 20 cents. So 426.85, 426.64, it's only 21 cents difference. So it doesn't surprise me. So again, if you're looking at the dark pool levels today or levels of the SPY for rejection or support, you're really looking at the 426.84. Now, again, if we go down to 426.50 and we bounce just like we did yesterday, not a surprise. We're going to see similar activity to yesterday. However, if we break that level and we continue going down, understand there are ghost zones below. And again, that was my SPY play that I mentioned earlier on in the presentation. So let's talk about what other stocks I am looking at today or that are on my watch list, and then we'll wrap it up and head over to Discord. Again, Romeo is planning on doing live trading twice today, once Friday morning. If you haven't caught Romeo's live trading, it's really something else. He uses his orbs, he uses his candlesticks, he's telling people entry, don't pay too much. He's giving you the proper entry, and as the stock or option is going up, he's letting you know where to set your stop losses. So if you're not using trailing stop losses, you're making a mistake. In fact, if you're not using stop losses on most of your options trades, you're making a mistake. And if you're like, well, I'm entering a position, why am I going to use a stop loss? I've been down 20% before. If you're entering a position and you're all of a sudden down 20%, 25%, then you're not waiting for best entry. You're showing FOMO. You're not showing patience, and you're entering too soon. All right, so let's go to my watch list. Here we go. Netflix again is up 2.28% this morning. I've got Stitch Fix on there. Why? SFIX. They reported earnings and guidance yesterday, which sucked, but they have a valuation of $414 million. Understand Stitch Fix was like a $10 stock. And then it closed yesterday at $3.68. They've been buying it for a couple of days heading into earnings. And again, earnings, in my opinion, disappointed. But then you have analysts coming out saying Stitch Fix price target $5. They're maintaining a $5 price target. The stock was $3.68, up 7% yesterday, from all the way down at like $3.40. Again, after hours reported earnings pretty weak. Guidance was weak. They're up 10% pre-market. They did mention AI on their call. So no shit. The stock was only up 4% after hours. They started mentioning AI just once. All of a sudden, it shot up to 5%. Now we're up 10% this morning. Again, I mentioned I'm going to keep an eye on Netflix, which is up 2.31% pre-market. Again, closed under 400 yesterday. Seemed to struggle. Was as high as 405, down to 396, closed right in the middle. And then all of a sudden, you have the price target reiteration from JP Morgan Chase at $470. And we know retail investors love to buy that. Okay, so we're pre-market. The SPY just turned positive. It just shot up. There you go. $428.18 just shot up pre-market. Again, I don't pay that much attention to what happens pre-market and after hours, unless I think it will be continuation. But as I'm watching this again, they're just looking to fill the gap. We know that people on the SPY or in this market continue to buy the dip. Me, I'm going to be more apprehensive. Again, I gave you the dark pool levels, what to watch out for: 428.84, 426.85. And if we break that level, a lot more to the downside. If we break 428.84, then yes, it's likely we see 431. Am I in the bull camp? No, it's hard for me to chase this wave of certain stocks. So again, that's where the SPY is right now. Apple's sitting flat. Where did Apple close at? 179.21. What are they doing this morning? Buying the Apple dips. Oh, overnight, Apple's down another $1.50. Great. What am I going to do? I'm going to buy it up to break even. There was just a large order that came through. So again, when I watch the market, I watch, Netflix, Apple. I'm watching Coinbase. Coinbase, which was up 4% pre-market, is now selling off. So 53.66. Now we're back down to $52, only up 1.63%. Again, I really want to watch Coinbase. I explained my thought process on Coinbase earlier based on their finds. I mentioned this the other day that hedge funds, big institutions are short three major names in technology, one of them being NVIDIA, one of them being Tesla, and one of them being Meta. And if I had to choose which one could potentially fall, I know Tesla has support. I know NVIDIA and AI has been fighting it when AMD is going up. It's kind of holding NVIDIA from dropping through the bottom. So I might actually look to short Meta. Again, Meta was 276 yesterday, went all the way down to 269 and closed at 271. So when we talk about shorting a stock, if I'm talking about shorting Meta, or the other day when I was talking about buying Affirm calls, I waited for Affirm, which was up 3% pre-market to $16, to drop all the way down to $15.15 before I entered my Affirm calls. Then when it shot back up to $16, I got the hell out. Again, when it was going down to $15.15 or went down to $15.07, I could have been catching a falling knife, but I followed Affirm long enough to know where the levels of support are, using the dark pool leveling, using Discord. So please, you've got to use some type of outside source to help verify your trades. With that said, Tesla's up 2% pre-market. Let's see, AMD, NVIDIA basically flat. Palantir is right there with it. I'm watching materials because that kind of tells me Dow plays. Alibaba off 1%. It was lighter volume yesterday. So I'm really wanting to see where these Chinese companies end up. I'm looking at US Steel and FCX. And then I mentioned some airlines the other day that if this rally continues, again, I don't want to be in technology. I want to be in more Dow-related plays. But again, I'm a bear, so I'd rather be on the sidelines trading options rather than chasing certain stocks, hoping they continue their bullish run where I think a lot of these stocks are overvalued. We could talk about Shopify. Shopify was one of the most actively traded stocks as far as option flow goes. And let's just bring that up. Let's look at the top flow, because when I look at the top flow, that allows me to trade options that have a lot of activity. When options have a lot of activity, it means they have volatility. Not volatility. Anyway, they allow me quick ins, quick outs without paying, without having to pay the ask, without having to sell at the bid. There's a lot of volume. So I might look to trade something like AMD today. I might look to trade the Qs today, or maybe TQQQ. I'm not saying if I'm buying puts or calls. Again, I'm waiting on rejection or support. I'm going to look at Nike and Boeing on the sell side. I've seen some Melly trades come in that were very bearish, so I'll be watching that. Again, Starbucks sold off the other day when it crossed over 100. Then we saw it back in 97. Let's just see where Starbucks is right now. SBUX. My point about Shopify. Shopify was on this list yesterday, one of the top bullish. In fact, 2 days in a row, and we've seen Shopify push from up from $59 or $58 all the way to 63 and a half, $5, which is probably like, almost 9%. Again, Starbucks, if you want to look at something that looks bearish and you're waiting for something to potentially turn around, you're going to look at Starbucks and you're going to see what? How many green days do you see there? 1, 2, 3, 4. 4 out of probably the last 22 days, there's been massive outflow. So when you see Starbucks on their dividend day, which they were buying leading into dividends, since then they've been selling. We had 1 day or 2 days of pump, even though it was continued outflow. And again, what's worrying Starbucks? Again, if there are closures and there's another COVID spike in China, Starbucks has a lot of operations in China. Not much volume this morning. Market cap of 112 billion. Let me just look at the forward PE. Their forward PE is 28.56. So, and I mentioned Netflix forward PE of $36. Starbucks is 28. Starbucks actually has solid product. Their costs aren't increasing the same way Netflix has costs of production and things of that nature. It alarms me. I'd rather be in a shitty Starbucks than a Netflix, but I don't want to be in either. All right, with that said, it is time to head over to Discord. I appreciate everybody joining me this morning. Have a wonderful day. Remember the 3 S's: safety, stress-free, and secure profit.